into unemployment, Fed decisions, the election, housing, stock market updates. There's two changes that I want to make to what I have researched so far. If you remember, I talked about an election protection strategy. And if Biden does get elected, we're looking at a 100% increase in capital gains tax. We are looking at a 30% increase in income tax and corporate income tax. We're looking at the elimination of the 1031 exchange where we can exchange money or property. We're also looking at the elimination of the $500,000 if you're married, $250,000 if you're single, exemption on a personal residence if you live in that house for at least 2 out of the last 5 years. We're also looking at any kind of step up in basis where we can leave assets to a spouse or to a child without tax. That will be eliminated. And we're also now looking at a big change proposed with the Biden administration of elimination or reductions in 401ks. While the last administration has tried to expand that by allowing more people to defer more tax and more money for retirement, we're looking at a huge decrease in any kind of tax deferral under the Biden administration. So again, that will go right into our election protection strategies. Not much has changed. I'm still on version 4. I do want to sound the alarm bell again and again that if we have a Biden win, we're looking at a potential 20% increase in the short term in the stock market. Again, that's because most likely that $2.2 to $2.4 trillion stimulus package will get pushed through based upon what Pelosi's CARES Act. Now, it's been reduced from the $3 trillion, but they're currently still, the breaking point or the negotiation failure is at that $2.2 to $2.4 trillion number. And again, a lot of that is special interest. It's specifically geared towards cities that have unfunded pensions. Again, it's not a great program, but we can anticipate a huge drop in the stock market after a Biden win and an initial increase primarily due to the artificial pumping of that money into the system. And again, we also look at what happens with the real estate market. And again, I'm sounding the alarm bells right here, right now about the real estate market. Now, if you've been following me since 2004, 2005, I had as loud of bells that I was ringing back then about the potential failure within the real estate market in 2007, 2008. These warning signs are just as evident as they were back then. Again, I would not be buying new real estate right now. I would be trying to sell and liquidate real estate right now, and I would be holding and ready to pounce sometime in the summer of next year. Again, we're finding now that the number of late mortgages, now this isn't just forbearance, these are mortgages that are late, are at their highest level for 21 years. So again, the warning bells are sounding. So we are still stuck in the stimulus talks. That really is going to dictate what the stock market does. Mnuchin and Pelosi are dead, horn-locked in a fight between paying off all these financially irresponsible states. We'll see what happens. Again, I don't think it's going to happen before the election, even though both parties are sounding little political horns about how they're going to fix it. And I just don't see it. But even if we see it, we're not going to see any activity where the money is physically going into the economy. Now, keep in mind, the stock market doesn't react like that. They don't wait until things have happened. They're going to do it based upon what is projected to happen. So on the unemployment front, great news. First time we've dipped below 800,000. We're at 797,000 unemployment claims. Our unemployment is down from 6.4%. That's quite different than the unadjusted 20% that was in March and April, and the adjusted 14.5%. Now, here's the best news. We originally back in February, March, with the current administration's fast track of some of the vaccines and some of their, what do they call it, Operation Hurricane or something like that? I don't know. But what they've done is they fast tracked a lot of these vaccines. We have 33 right now in phase 1 or in phase 1, and we've got 6 that have moved up into limited use. And then here's the great news. Remdesivir is now approved for hospital use and distribution and it is approved for adults and children over 12 years old. Now, if you have insurance, it will cover it's going to cost the insurance company about $2,300. So if you don't have insurance, you might be able to work out something a little bit better, or if you have a high deductible, it's going to cost about $2,300 for a 5-day dose, whereas a government, meaning Medicare, Medicaid, it's going to cost somewhere around $1,700 to $1,800. But the good news is we are on track. So I would also say, if you look at the numbers as to the number of reductions in deaths, the number of reduction in deaths has gone down by about 40% for those people that are infected. There is a more logical way that the medical community is fighting these things. So again, when we start to see a lot of these cities, especially like the Californias and the New Yorks and the Illinois, where they're going into new rounds of proposed shutdowns, again, I just don't get it when you look at the science and you look at the numbers. And now you're getting down to that point where the number of deaths per infected is right at the beginning of the virus. We were at 6 to 10 times the number of deaths per infected of the normal flu. And now we're at 2 to 4 times. So again, the numbers are actually getting more closer to the flu virus, which again, we don't shut down economies. We don't limit by 25% some of the people that can show up in a restaurant. Do I think masks are a great idea? Absolutely. Anything you can do to stay safe until everybody gets out of this. We don't want another second wave. But I would implore those people that have the ability to write to their congressmen, write to their governors, and say, what science are you really using? Why aren't you using the science that we're looking at? Because is there some political gain to this? Is there some financial gain to this? Is there control to this? I don't know. It just behooves me as to how some of these cities can continue to do this. So vaccine news, Pfizer, Gilead, and Moderna. Now, Moderna is only 2 to 3 weeks away from approval. Pfizer's about in the same track, and Gilead has produced over 70 million doses of the remdesivir. We'll see if I'm saying that right or not. All right, interest rates, nothing to really account for changes within the interest rates. However, I do want to bring up one new point. I've been talking about how Fed Chairman Powell and the FOMC has completely flipped on its head the way that they're computing inflation. They've gotten rid of the Phillips curve, which was which was what was used since 1957. And it's very different now. And, I'm anticipating a full 5 to 6% and even possibly more inflation in the next 4 years. Now, here's the key, though. A lot of that depends upon the election, because they may change their stance, because Fed Chairman Powell only has 15 more months in his chair, in his seat, his chair, if you want to call it. Okay. Stock market, where do we stand? Well, we're still seeing some volatility. You can kind of see that it floats a little bit with what the virus and the vaccine news is, and in conjunction with the stimulus. Again, as soon as we get a stimulus plan, you can anticipate a very quick and very fast increase in the market. Again, if Biden is elected, I see a higher increase in the stock market, but a bigger crash. If Trump is reelected, I see a smaller increase in the 10% range, but a more sustainable economy because it's not so heavily taxed. Well, here we are with the stock market ending 1023. Just recently, that those numbers have gone down a little bit from last week. Now we're down to a 6.01% increase since the beginning of the year. So again, we're back on a reasonable track, and considering that there's still a 6% unemployment and we're still up 6% in the stock market, that's a positive expectation going into next year. All right, let's cover the actions needed. Number one, change your portfolio. I can't tell you how many times I've been reviewing portfolios in the last couple weeks, and they're coming from investment managers and money managers and brokerage companies, and they have not shifted. Literally, they have portfolios like they were running a year ago. And I'm sorry, the buy and hold strategy right now in the standard indexes does not work. How can you turn on the TV and you look at Walmart hiring 150,000 people Amazon hiring 200,000 people, Tesla's opening new plants, Netflix streaming. Yet there's companies that are literally going to bankruptcy. 24-hour fitness. Peloton goes off the map, but 24-hour fitness goes out of business. You have to look at where the money is being spent. This is an entirely new economic situation, and the portfolio needs to adjust to that. Sell real estate. I said that before. Consider tips. Now, again, I'm not going to consider this with as much fervor as I did in the past because tips have actually, so many people have done it now. They're actually being priced at a premium, so I would not. Now, we did that back in March, July, September, and October, beginning of October. I wouldn't suggest moving as much to tips right now because, again, you're paying a premium to get into them. Consider reverse mortgages. Again, once in a lifetime that you'll probably see these interest rates as low as they are right now. Now is the time to capitalize. Take the reverse mortgage now, bank the money, get ready for a real estate crash next year where you can jump into a vacation property or rental property. Make sure you're paying back any accelerated IRAs or 401k or profit sharing withdrawals because the CARES Act, halfway through the virus, the IRS came out with stipulations that changed what was originally anticipated. Again, through this election, plan on massive volatility. Even once the election is done, depending upon who gets in, we can anticipate a lot more volatility with a Biden win than we can with a Trump win. Make sure that your family trust is adjusted for the Secure Act. Reduce any kind of bonds from long-term into intermediate and even shorter term now. And again, if you don't have an election protection strategy right now, that's something that you've got to work on. You've got to lay your battle plans. So if Biden gets elected, you should have a list of things that you are ready to transact. If Trump gets elected, or if option C, if you don't know who's going to get elected, you got to have a battle plan because that means that we don't know who's going to get elected until January, which means you better make some transactions this year. Now, while I tell you this, a lot of you are going to sit back and go, I'll wait till the election is over. No, you need to put that battle plan into place right now. Here's why. If Biden wins, there are going to be millions and millions of people that are going to be transacting these maneuvers. Just because you think you're going to wait does not mean that you're going to actually be able to make these transactions because these banks, these brokerage houses, these custodians, these insurance companies, they are going to be massively overloaded with requests. And it doesn't guarantee that it's all going to get through in year 2020. So again, you should lay your battle plans now. What's that old saying? Plant the seed or dig the well before you need the water. All right, that's it for today. I'm going to wrap it up. Hey, if you have not subscribed to our YouTube channel, we're now on 2 separate channels. You can subscribe on either one. You can Google H&H Retirement on YouTube, or you can also Google Wiser Retire on YouTube, and you can subscribe to both of them. The same exact video, the same exact broadcast is being simulcasted between all the different channels, but there's additional information on each channel that might apply to you. But go ahead and subscribe. That way, if you miss the show on Fridays at 4, you'll be able to catch it anytime because it'll send you a link as soon as the show is done. Hey, with that in mind, if you want to give us a call us at 844-702-1040, 844-702-1040. And I'm signing off. Have a great weekend. Ken Himmler. Bye-bye.